What's up? Happy Friday, everybody. Glad you can make it on the stream. It's been an interesting week this week. I know I say that every week, but once again, we're at the end of the month of April. There's a lot of levels to look at. The thumbnail did on purpose because Tesla has Elon's been big in the news this week. He launched Starship. It was a nice little interesting thing to watch, a rapid, unscheduled disassembly. Might want to talk about that a little bit. If you don't follow the YouTuber Scott Manley, he has a really good breakdown of it. One of the things I liked in there was he talked about how when it was launching, you could see the rocket engines flaming out because they were experiencing some very engine-rich exhaust. Pretty funny. All right, so hi, this is the weekly close live stream. I do this every week at 4 p.m. Eastern. I do it for you guys. I want to share what I know about trading for about the last decade. I'm happy to answer any questions or look at any symbols that you guys want to look at. Last week, the week prior, I got given wizard status by TradingView, and I've had a lot of questions. People just assume, I guess, because I'm a wizard, that I'd already teach classes and that kind of stuff. I guess most of them do. I do not teach classes yet, but if you do have questions, now's the time. This is why I do the live stream, to talk about what I want to talk about, but also what you guys want to talk about. I also have a Discord, a trading community, which I don't charge people for. I just want to have a community of active traders where we can all share our ideas. And I post the ideas that I come up with in real time. Not all of them make it to TradingView, but I did today definitely want to talk about Tesla. Tesla, I've been watching this for many, many, many months now. Actually, the whole year of 2023, Tesla's been one of the most interesting stories. There's a lot of other stuff to talk about that happened this week. Some good, some not so good. But yeah, we'll get into that in just a second. But if you got, by the way, if you have any of the questions, like I said, in the chat, post them. So, all right. Hey, what's up, crypto? I'm doing well. I'm a little stuffed up from allergies, so let me clear myself a little bit. Hang on. Okay, that should be good. All right. What's going on with the SPX? Of course, I want to talk about that. And yeah, let's take a look. Let's do the market recap to start with, and then we'll start looking at the topics that I've got on my list. And so let's start with the S&P 500. Now, if you've been watching the streams every week, this line has not changed on the S&P 500 futures. I use futures. You can use SPX or SPY, whichever one. It's all a derivative of the same instrument, and the price action is very much going to be the same. There we have on the ES, the S&P 500 Index Futures, that level, which is, for those that are new, the 50% retracement of the all-time high all the way down to the October low. That is one of the best indicators of technical analysis. I cannot stress that enough. If you watch my live streams, if you look at any of my posts, if you read Discord, I don't use anything fancy. This 50% level works so freaking much that I don't really feel a need to add a bunch of gobbledygook to my charts. And this level has been the resistance level of the S&P 500 index. On December of 2022, it was the top here in January when we had that little beginning rally, and that is what it has been fighting to break against for the last few weeks. Now, last week, when we looked at this, another thing that I trust with price action is Candlestick closes, bar closes. That makes me patient. It also lends a bit of confirmation to any kind of analysis that I'm doing. And so last week, interestingly enough, on the futures, the close of last week, this bar right here, that close was 41.5675. So technically, it closed above that level that was set back there. And I want to show you something really interesting about price action today, just to show you how powerful this level actually is. The only thing that we looked at last week that kind of was a divergence from that was on the SPX itself. That week had actually closed to hold its level, still the same level, but this week we're going to close both the SPX and the S&P 500 3 bars in a row in the futures above that level. It's not rocketing up just yet, but that is confirmation that we have indeed broken the resistance. Now, the market can play games. Who knows what it can do? But rather than guess, this is the highest probability assumption, is that this level has actually been broken, and we are actually in a bull market. So do that as you will. Myself, I am getting long and staying long. I think that there's a lot of FUD out there. There's a lot of anxiety. All these things really play into one of my favorite quotes about bull markets. I don't even think I need to look it up. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die in euphoria. And whether it's pessimism or it's skepticism, we got plenty of that going on right now. Anytime you come from a low, whether it was the COVID low back here, I remember in April of 2020, there were people saying that, oh, well, more people are going to die. The Fed's going to not be able to control this. We're never going to go to work again, blah, 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 blah. People assume the recent past is what the future will be. And so we've had a whole big bearish year right here to get everyone flipped over bearish. Can you remember 2021? All the optimism, the euphoria. 2021 was, by my actual estimation, the most bullish year in history. Why? Because every single month, every monthly bar of the S&P 500 made a new high. That was 12 new monthly highs. Never in 125 years has that done that. Prior, doubt it will again. There were 2 11-month highs, but never a 12-month high. So, not saying that I had enough wherewithal to say, I need to sell everything. No, but I think that plenty of people have been flipped to the bearish side, and a lot of bullish setups are actually working. So that's what we have there. Now, what's interesting about this in terms of price action, going down to the day trading level, the 1 minute time frame, this is the kind of stuff that makes me believe in this astrology for men, this technical analysis. Remember that same level, I haven't moved it, 41.5525, that level, which was created by the entire price action of 2022, today on the 1 minute time frame, you had a confluence. Let me get rid of that news stuff right there. You had a 50% level that set up from the news low from at 8:30 this morning up to here, and that was the level. Boom, it held. So it was a combination of post news 8:30 this morning up to a high at about 10:30 a.m., pulling back to a 50% retracement level on the day trading time frame that matched up perfectly with a multi-month level. Mwah. Beautiful. Thing of beauty, and why I don't feel the need to clutter my charts. These things just work. It just works. It just works. And we'll talk about Tesla in a second, because that's been a big validation of it as well. All right. Did we lose connection? Uh-oh. Hold on. Okay, I think it might have come back. Let's see. Hang on. Let me ask guys. Looks like my trading view is lagging a little bit. YouTube looks good. Yeah, YouTube is going. Jen finds Discord. Yeah, looks like it's a trading view issue. Okay. All right. Well, not much I can do. Hopefully, it does a record as well. Um, that's unique. Sometimes it seems to be YouTube that messes up, but looks like yeah, YouTube's working and Discord's working. Which, by the way, guys, I stream this every Friday, 4 p.m. If you're catching this late, this is when I normally do it. It's great for live interaction, but this is going to be saved on my YouTube, and also I stream it live in Discord. Which actually, Discord over the course of what so many years that I've been doing these streams actually tends to have the best fidelity. Actually, it doesn't go out quite as much. So okay, all right. Looks like we're back on TradingView. So let's see. Okay, looks good. All right, let's get my rhythm back. Let's see here. Okay, doke. All right, so hit the next one. So NASDAQ has actually been pretty interesting as well. NASDAQ had a high that it set up on February, and been a little tricky here that earlier this week, Monday and Tuesday, pushed down below that level, but NASDAQ itself is trying to get up higher. I mean, if we zoom out a little bit to see the weekly, to kind of clean things up, looking at weekly closes, then it's a little bit easier to see that NASDAQ broke above this in the last week of March, held it throughout April, and then once again, held it again. There's really not a firm case for this market going down in the technical standpoint. It's been tricky, but like I said, the NASDAQ has held the break of this January rally. In other words, we had this big rally in January based on AI and just general market bullishness. And it has surpassed it over the course of April and not crossed back inside of it. And so now market has survived a test of it this week. A lot of earnings push things around, but things are coming out okay. All right, let's jump into crypto, and then we'll look at some of the other stuff. So this has been, there's a little interesting price action that happened this week on Wednesday, almost like a fat fingering of an order. But not much has changed in my analysis going to, I think that Bitcoin is going to be doing a pullback, or at least I'm hoping, because what that would do is set up a really, really nice 50% buying opportunity around the 26,000 level. It looks though that it might have found some support here. That's not really a level I want to see. I wanted to see it come down a little bit more. And now what you're going to need to look for is to see if it can break or hold this all-time high, maybe set up a double top and then proceed with the pullback. If you can break that high, then the resistance on Bitcoin is going to be, the first level of resistance is going to be basically 32, because it's going to be basically the 50% of this leg down. So I'm not looking to get long just yet. That's why I wanted to see that pullback, because you just don't have enough upside. Even back when we were looking at this about 3 weeks ago, when we're in this range right here, or even in this range, you just don't have that much upside to 32,000 to make it a good risk reward, especially after considering that this has gone up for all year long. There were two opportunities to get into Bitcoin when it broke out here based upon an Ichimoku breakout. Posted about both of them. And the other one was the pullback here on the banking crisis FUD. Since then, you're basically just participating in the retail leg. You're participating in the FOMO. So, as my Bitcoin Maxi friends will say, it's always a good time to buy. You're not too late, bro. As a trader, you got to wait. You got to wait. You got to wait for the next opportunity. Ethereum is also doing a pullback. The level that I want to see for Ethereum is, let me clean this up. Again, it's going to be the 50% retracement of this rally from the March the 9th, March the 10th low. And so it almost got to that point, 1750, let's call it. Again, it's a nice solid level. This is the high of that range, and then a 50% pullback. May or may not get it, we'll see. Bitcoin is definitely, if we look at the Ethereum Bitcoin cross, Ethereum is not performing as well versus Bitcoin in this year, in 2023. And so that's another interesting thing to note. A lot of people thought that Ethereum was going to eat Bitcoin's lunch, but I mean, hey, Bitcoin's got NFTs now. So what are you going to do for that? Is a TradingView stream still going? It looks a little laggy. Okay. Well, I'm not going to be able to fix that. All right, let me catch up to chat here. Now we talked about the high level stuff. All right. Jeremy, sorry I'm getting to you a little bit late. Found your channel, watched your video on TLT from the end of last year. No, my outlook on TLT has not changed. TLT is still, I think, a good solid thing to be in. Still in it from basically the end of December. It came back to retest it in February. But look, one of the things I said in that video was that it's bonds. Bonds are for old people, so it's going to move like old people. It's going to be slow. And so as long as it appreciates slowly, like a bond would, I'm going to be pretty content with it. This isn't a YOLO play. This is just a good, solid, something is at a multi-decadal low, because that's what bonds and TLT was. TLT was at a low from 2011, so a 12-year low. I mean, any asset that's at a 12-year low, you got to take a look at. And so off of that level from earlier this year, from where I have this marked off, it's up about 5%. Are we going to retire on that? No. But is it a good place to put your money for this year? I still think so, yes. I still think so. I mean, basically, what TLT and what bonds in general, what the pricing you see on the charts has done is priced in the Fed raising rates possibly two more times this year. And as long as they stay on track for that, then you're going to see TLT appreciate slowly, because TLT is going to be loading up these newer bonds at higher interest rates. Things are going to be returning to normal. The only way this gets disrupted is if the Fed comes in and announces more interest rate hikes, which there's always the concern about that. But also, if, for instance, the Fed starts to notice we're going into an economic slowdown and they need to lower interest rates, then TLT will go up, because all those recent bonds it's put in there at higher interest rates are going to increase in value. So if nothing changes, which so far has been the case, TLT will slowly appreciate in value. But if something big changes, we'll talk about it. We will talk about it. Hey, Angie. Meta.
Hello.
I have that in my thing. Oh, somebody want to say something? Was that Hey.
I was just pretending to be Angie.
Oh, Edgy? Okay.
I wanted to say it.
Do you got something to add to market stuff?
Oh, Angie. Was it Edgy? I thought it was Angie.
Angie. Yeah.
I agree with what you're saying on TLT. As long as that thing stays over like 104, 105, I just keep buying different things. You know, you can get a lot of instruments that pay a nice dividend, monthly even, on bonds right now. So it's just a pretty good accumulation spot for a safer, quote unquote, safer place to park your money. Although you might have felt bonds were safe last year and you are incorrect. So things can always go down, but it's certainly at a spot longer
Yep.
term. I've been with money in there for sure.
Well, I'm old enough to remember 2 years ago when there was no such thing as dividend yield. But now
Yeah,
there is, and the reason why I think people are ignoring it is because they're so concerned with inflation. In other words, they look at something that has like a 4, 5, 6% dividend yield, and they think, "Oh, well, I'm not beating inflation, so I don't want that." But what else are you going to put it in?
yeah. It's YOLO calls. I mean, that seems
Yeah,
to be
yeah, YOLO calls,
that's
of
it, right?
course. Yeah, exactly.
Nobody's patient. But you were I think right at to go not to backtrack, but I think we're obviously above the consolidation range now. We had a big look below and fail on ES and NQ, right off some key levels, and we closed above it for the end of the month. It's not insignificant. So it's to me, it's I'm buying the dip until we're closing below, 40.80. That's what I'm doing.
Yeah, I mean,
TLDR.
you like I said, there's this this astrology for men, this reading of the tea leaves, as I think you started calling it. Um, that's the best thing we have to go on. Like we don't know the future, but we have for everything that we trade day in day out. There's our confirmation that market go up. So, all right, let me jump into because I did want to talk about Facebook, Meta. Now that was the meme that I coined, or I didn't say it, but other people did, back when Facebook, Meta, whatever you want to call it, did its big dip. This was in the ancient times of February 2022. And I remember distinctly when this happened. I was reading my Discord, other Discords, and people's common sentiment was Facebook can't go any lower. And again, when I look at 50% retracement levels, if Facebook had dropped to 260, if it had opened at 260 after this big earnings announcement in February of 22, then I might have considered buying it. But a couple of things. Number one, it opened below the level, so now it's already in what I the valley of risk is basically where you don't know where the bottom is going to be. You just don't. No matter what people tell you, once you break a major level, especially as important as this could have been, 50%, also some price action here, a little auction zone there to play around in. The fact that it opened below all of that was deadly. And then plus everyone's saying it can't go any lower. That makes my contrarian spidey senses tingle that everyone is thinking that something can't happen. What's going to happen? It. It will happen. And so basically that was the story of Meta for the rest of 2022. A lot of people dip bought. A lot of people thought they were getting a great deal. And I guess the answer to that question of how much lower can it go, whenever you find yourself asking that question, be very cautious and self-aware. Or whenever you hear someone else saying, how much lower can it go? Well, the answer, interestingly enough, oftentimes enough, whether it's Bitcoin, whether it's Facebook, you should, in this case, it was 64% lower. Whenever you ask yourself that question, how much lower can it go? At least half off, at least 50% lower. That's what you should tell yourself. That will keep you nice and grounded and from making any mistakes that you'll come back to regret. Now, where are we on Facebook? Well, that down move has abated with all this bullishness, and now Facebook has returned to one of my favorite levels, 50%, 240. Add a little bit of confluence here, see where our bottom of that auction range is right there. So, yeah, Facebook now is at a resistance. So, if I am a trader, rather than a hodler, I would be looking to buy a put. I don't think I'd short this, but this would be a good for long-term puts. The reason I would actually want to play these as options is because what just happened was earnings. Earnings Wednesday night popped it up to this level. And what do you have when you have earnings? You have IV crush. In other words, the options, the prices of all your options drop. You do not want to buy options before earnings. This is my little Thinkorswim chart right here. Down on the bottom is implied volatility, which I color coded. I wish TradingView would have this feature. It's the main reason I use Thinkorswim is for this implied volatility visualization. But if you notice, let's just look at this just as an example. See how it kind of goes up and down with earnings cycles. Pretty much any stock is going to do something similar to this, where if you buy options before the earnings, maybe if you get a big move, you're going to make money, but most of the time you're not. So that's a little lesson I try to beat into people's heads, beat into new traders' heads, because people love to play options before earnings. People love to, it's like a lottery ticket. It's gambling. It's just gambling. You're buying a fun ticket on that stock because you think it's going to go up or you think it's going to go down. But the reality is the odds, the deck is stacked against you because you need not only to be right in the direction you need. And the problem is when you have earnings coming up, they inflate implied volatility. They increase those options prices to the point where they price in a range of where that can move, plus or minus a certain, dollar amount. And if the earnings announcement falls inside what the market has already priced in, you don't make any money. It has to blow it out of the water. That being said, earnings, IV drop. Earnings, IV drop. Earnings, IV drop. And so what do we have here? We now have a big old IV drop here as well. So options now on Facebook are cheap, relatively cheap. In fact, IV percentile, what that means is 1% of the last trading year have been higher. So in other words, it's at the lowest point relative to the last year for both rank and percentiles. Very low, very low. Average is about 51% IV. So that being said, if I'm looking to, and I'm going to look at this next week as we come in, because one of the things that would be great is if we can get here on the 30-minute, get some sort of a lower time frame technical reversal setup like Tesla gave us this week, which we'll look at in just a second. So I'll be looking for some kind of a setup in here, and I'll probably express this with some put options. And they're not going to be weeklies. They will probably be out to January of 2024. So I think that's a good shot. It's also going to hedge a lot of long exposure that I have. So I feel pretty good about using that as a hedge.
It'd be a good time to buy longer dated options in general. The VIX is at like a 3-year low right now.
Yes. This is
got destroyed today.
It's the market is doing what it does, which is shifts between regimes, and yes, whereas I have not been very interested in buying options for the last since 2020 when the spreads widened and IV was really high. Now you're getting to the point where IV is low, options are cheap, but that also means that if IV expands, you're going to get that double whammy. Whereas before, you've been hit by IV going down. It's interesting here that basically I want to find a useful way to chart VIX price action, but it's not very consistent. But you see on was it Tuesday of this week? It came up to basically hold that 19 as resistance. I mean, we're getting.
Yeah, I got it at 20.
Yeah.
20 and 17 is all I got drawn on that chart.
Yeah. Well, I mean, the reason I have the two levels is because really these have been sort of a range. But yes, if you zoom out and you kind of take a look at it, yes, VIX came up, could not break higher. This is another bullish signal. It just is. New low, yeah, like you said, 3-year low on VIX?
Happened to coincide, the touch of 20 with the spike of 4080. The coincidence for our man Jin.
So yeah. Let me go back to chitty chat. Make sure I'm catching up. All right, so DXY and BTC. I talked about Bitcoin. Basically, look for it to come to 32, but don't take it unless it pulls back to 25. How much higher can Tesla go? Exactly. Let's see. Dollar. So the dollar and the stock market historically do have an inverse correlation. As the stock market goes up, dollar goes down, and vice versa. The way I try to conceptualize that, to try to explain it, is when you have stocks and you sell them, what do you get for that? You get US dollars. And when you want to buy stocks, what do? You trade your US dollars for stocks. And so that is, there's more to it than that, but that's one way I like to visualize it for myself. But from a technical level, for the last few weeks, again, looking for bar closings. 2 weeks ago, we had our first close on DXY. The key level of DXY is 102. It's the 50% retracement from the January 2021 low to the October 2022 high. And it came back to survive a hit of it at the beginning of the year, but it could not push up to retest the high. So now 1 week, 2 week, 3 weeks close below it. Just like the stock market has closed above its resistance, the DXY has closed below it. The level's broken. Again, based on that simple criteria, dollar is probably going to go down. And actually, it's time for a little bit of FUD. I read this week, which is yet another. Let's see, where was... I'm looking for a news of it, but in addition to China making deals with lots of other countries like the BRICS, BRICS stands for Brazil, Russia, India, China, South Africa, basically the large potential emerging economies trying to create their own currency system, this de-dollarization. It's happening. It's happening. It's not good for us as Americans. It's really not. And it all kind of it's been happening for a long time, but the kicking Russia out of the what is that thing? What's the dollar little banking thing that we have? Let's see, Russia.
Petrodollar?
No, it's like the salt or what is it?
I know what you're talking about. I do not know
Swift.
what the
Swift. Kicking it. Thank you, Leon.
acronym.
Swift. Yes. And so, yeah. Hey, sorry if we're having trouble on TradingView. Yes, Mona. I do this on YouTube and I do this on Discord. Both links should be below. So if you want to click over, you can. Normally, TradingView is really, really good. So today we're just having some problems on TradingView, unfortunately. But yeah, we're on YouTube live right now. So if you want to shift over, you can, or join the Discord. It's free, not going to charge you. I'm also streaming it there. We got some people in there talking as well. So yeah, so this de-dollarization has been going on, and one of the things that I noticed to this week, another country has joined this de-dollarization push, where Argentina, their largest trading partner is, of course, Brazil, their neighbor, but their second largest trading partner is not us. It is China. Little thing I found out from this. I don't really keep up with Argentinian economics very much, but they're going to start using yuan. I guess I'm going to have to learn how to pronounce this, aren't I? To pay for their Chinese imports. So they're not going to go through the dollar anymore. They're just going to do straight China because it's their second largest trading partner. Why would you want to go through a middleman? And this is not good for us. I don't think people realize the knock-on effect of how the American economy is benefited by the fact that everyone wants our currency. That money that you make for working your job, that money you make for, selling some lemonade on the corner, that is in demand from other countries, and they want our dollars for their goods. If they want less of our dollars, for their goods. That makes us less competitive. It doesn't make us richer. It doesn't. And it really does. It really got accelerated by this kicking Russia out of SWIFT because we wanted to take a hard stand and, kick them out and make sure Raytheon and Lockheed Martin and Northrop Grumman, got some money. And so, yeah, we're going to see the knock-on effects years down the line when no one will really attribute blame properly because those people will be likely out of office. But I don't know if I don't see this reversing unless China faces some economic hardships. Now, let me say this about China. China is not really it's not really super smart. It's not really brilliant to invest in Chinese yuan because the Chinese government has a long and storied history of massively devaluing their currency. So this is not without risk. I mean, basically, China is theirs to lose now. If they, for some reason, do go through another mass devaluation, which could be less likely because more countries are depending on it, it's going to make people very angry and definitely ruin the status they have. But it's theirs to lose right now. The trend, there is I think I posted it this week actually. Let me go back through Discord and find it. Yeah. So, and here, this basically sums it all up in a chart. So basically now, in terms of China cross-border deals, that trend, it's equal because it's basically the dollar or the yuan. I mean, sure, there's euros in there somewhere, but it's mostly dollars. That has actually flipped. That has actually recently flipped. This seems important, but like I said, it's China's prestige to lose, and anything can happen. They've got a lot of issues. They've got a demographic issue. Who would have thought 25 years after a one-child policy, you run out of 25-year-olds? But we'll see if they can handle it. But it's if things continue the way they are, this chart, this technical analysis is basically just going to say the same thing. People are going to want dollars less, and the demand for dollars is going to go down. We shall see. All right. Let's see. Sand. All right, yeah, let's look at Cardano. I haven't looked at Cardano in a while. I honestly have not been looking at the cryptocurrencies of yesteryear. I've been primarily focused on Bitcoin, Ethereum, and Monero because those are the major players. And really, unfortunately, for all these look, a rising tide lifts all boats. We're in a crypto winter. I've seen many of these before, and you've had some bullishness this year because optimism has returned. Basically, all the FUD has kind of abated. So you're seeing some upward movements, but to really get movement in anything, you're going to need that risk-on sentiment, and we're not going to get that for a little while. It takes a while for people to forget things. Right now everyone's thinking bearish for the stock market. That's why they're all in doubt about this being a bull market, and they're also there's a lot of FUD about Bitcoin and cryptocurrency in general because of regulation. So you need some time for all that to people to forget about that, and then things can move again. From a technical standpoint, though, with Cardano, this is just reminiscent of coins of the past. I mean, anytime I see something like this, it all looks kind of the same to me. What you'll probably get at some point is you might get some kind of a lifting point right there, but you don't know when that's going to be. Looking at it from an Ichimoku perspective, you're bullish, you're above the cloud. Right now it's in a bullish trend, but you don't want it to get back below this level here. If you get it back below this level right here, 36, that's going to be deadly. And at that point, what this thing will probably do is just continue to give you more headache as it continues along. But for right now, because of the bullish beginning of the year that we've had, we've started to clear some of these. We held basically this pullback in here, and not one I would have taken, but it did not. That's pretty cool right there. So price got below the cloud, but momentum did not. So you survived that pullback on Cardano back in March, and so that was good. That was good. It's very good. And you need to keep it above the cloud there. Keep it up there, and the bull trend can continue. So hodl, but just be ready to accept the fact that we're in a crypto winter, and you're not going to get much help. KC, your chart request. Let me scroll. Oh yeah, I'm going back and forth between YouTube and this. All right, so let's look at Monster. I love the story of Monster. Who would have thought that sugar water would be one of the best performing stocks of ever? Long entry at 56 with a stop loss of 736 or 427 with a price target of 70. Okay. And this is not a trade I would take because I like pullbacks. Some people are breakout traders. I'm a contrarian. But I'm not going to poo-poo your trade. I'm not going to say I don't like it. What I would have rather you have done was come in here in February. So this is the kind of price action that this is beautiful. This is beautiful right here. So you have the highs that Monster set up throughout 2022, and then here in November came up, and just look at the closes. This is why bar closings are so important. This is why at the beginning of the live stream I was talking about the S&P 500, also earlier VIX, looking for candlesticks to close around levels, just simple levels. This high right here, we can, let's start over just to reinforce this point right here. Hey, look at that 50% level as well. So I mean, I would have liked it as if you would have come in 2022, but we don't have a time machine. So, but yeah, validation of the concepts I'm talking about. Boom, 50% level there, but also this high that it set up right here. You can see it. I mean, that's a strong level. 1, 2, sort of 3, but really 3 here at 50, basically at 49.95. So that's a strong level. And what you want to do if you want to play breakouts is you want it to break that resistance level. And notice how it comes up and pokes its head a little bit at it. It respects it again for a fourth time, basically telling you, hey, I'm a level, I'm here. And then up it comes up, and then on these daily actions, let's just watch this. So if we're watching this on the daily, I mean, it's trying to get back below it. It's trying to get back below it, but it's just not going to be able to. Every time it hits there, it gets stronger and stronger and stronger. And what you really want to see in a breakout is it break the level, and you can go in on the breakout. But really what's awesome is if you can get a pullback to that level right there. And so you have multiple days to do that. And boom, little bitty spike there coming through. And then eventually what it's going to do, if it holds it long enough, is it's going to launch off that level. And so right now you're in the launch. So while you're playing bullish, you're buying something that's bullish, good. You are a little bit late into this move, but what that ends up doing, let's see, your stop you said was 47.92. Okay, that was actually what I was going to say, because if this comes back into this range right here, that it's a failed breakout. So I like your stop. I like that you're shooting for a 2-to-1. Me personally, I would rather see a pullback to a level. That's just me. So I'm going to wait this thing out. But Best of luck. I like your stop. I like your plan there. True. TransUnion. Long entry 67.50 with a stop 65. I like that you have a plan. I really do. And also, are you playing with shares or options? I'm gonna be really proud of you. Proud of you if you're playing with shares. 67. And your stop 65.26. Oh, you're looking. Okay, so you must be on a lower time frame here. So again, 2 to 1. I prefer a 3 to 1. I prefer a 3 to 1 personally. I don't see the problem with this is you've got a resistance up there, 71.50. Okay, looks like that's what you're. Oh, you're trying. This is a really kind of a really very short term trade. Like you must be taking this off like a 30-minute or something like that. I like that you have it. I like that you're looking for a risk reward. I try to encourage you to do 3 to 1s. Seems to me you're a breakout trader. I hope it works out well for you. I think here, if I was going to go down to lower time frames, let's see. Yeah, you got a breakout. What will be really cool here, going back to what we were looking at Monster, is if you get a pullback to 67. Okay, so that is what you're doing, I think. A pullback. Okay, yeah. I like that. I like that breakout pullback. Good stuff. All right. What's your opinion of BTC.D? Bitcoin dominance? My opinion is it's cool to look at, but I don't really know what trading signals you can get from it. It's definitely at the top of this range, but what I would rather look at is, as I mentioned earlier, like something like Ethereum, Bitcoin, Monero, Bitcoin, some sort of a cross pair that's actually tradable. But I think it's pretty obvious that Bitcoin has been dominating this recent bullish momentum. The maxis, the Bitcoin maxi machine, they are very, very strong-willed, and they've got a very good PR campaign. A lot better than any of the other alts out there. They got a lot of true believers. They have whole conferences. There's a Miami conference coming up. Yeah, so Bitcoin is the safe haven asset typically during crypto winters. It is the one that people, it tends to go down less. It tends to be less volatile than the other currencies, and it tends to be the safer haven asset. That's just what it tends to be. So yeah, the Bitcoin dominance is definitely going to do well in a crypto winter, I think. But as far as like trading the Bitcoin dominance, I'd rather actually just trade the instrument itself, personally. So, all right. We're kind of coming up in the last couple of minutes. If you guys got some more stuff to look at, I will hang out with you guys and talk. But let me go through here and make sure that we've got all the chat requests taken care of. Okay, good, good. One thing that I need to pour one out for, commiserate, is Activision Blizzard, which I'm gonna look at this positively as another affirmation of price action. Like, pretend like you don't know anything about Activision, but pretend you don't know what ATVI stands for, and you don't know why it's doing what it is. If you just looked at this chart, okay, if you just looked at a chart where you have a major move up here in 1 year ago, pulls back and holds not once but twice a 50% retracement level, that is an awesome trade in itself. And then as soon as it hits, like on the day after the day after it hits that high, perfectly, perfect. I mean, you can't get more closer than that. The day after that happens, what do you get? You get some news that rocks it down off that high. I don't believe in coincidences, but I also don't believe in conspiracy theories. So I don't know if the UK government has an open interest in the ATVI merger. Um, it's a little sus, but it's also very annoying to me because I've been playing this as a merger arbitrage since basically back here in January of 2022. So now I'm a little bit below break even on these shares. Microsoft is going to basically what's happening is Microsoft's trying to buy Activision Blizzard. They're supposed to buy them at $95 a share. So a merger arbitrage is when you buy the shares of the company that's being absorbed in hopes that the deal goes through and you get all your shares bought for the buyout price, $95 a share. Well, there's this thing called government, which the wheels of it turn slowly and also sometimes dumbly. And there's all the, I think the EU approved it, which was why you had that big bump up here. But then the UK decided, meh. And so I wish that basically they would just say, like, okay, we're just not going to sell our games to the United Kingdom then. I wish they would do that, honestly. As a shareholder, that's what I would vote to do. Just don't sell games there. In fact, I don't understand why the government has to tell video game companies what they can and can't do. Anyway, I digress. I'm annoyed by this because the deal was supposed to close in June, and now it's in doubt. Annoying. Crypto freelancer. You're asking if it's better to buy Bitcoin itself or some altcoins if Bitcoin drops and a good buying opportunity arises. I would take things on an individual basis. I think that cryptocurrency is not dead, but I don't think it really has a use case. And I say that as someone that's been in cryptocurrency for over a decade. One of the things that I felt but didn't like fully realize to articulate until the last few months, and yes, admittedly in the bear market cycle, was that if you think about it, the internet, let's call the internet was born in 1985 as an offshoot of DARPANET and all that kind of thing. 14 years into the invention of the internet, we had use cases like email, online databases, websites, things that helped businesses, that made businesses run more efficiently, allowed businesses to do more business, use cases that generated wealth. 14 years into the invention of the internet, we had these things. And so if we go over and we talk, let me bring up Bitcoin. I want to talk about this. So if we think about cryptocurrency as being new, technology, transformative, we got to ask ourselves, transformative to what? What does it do cheaper? How does it generate wealth? And NFTs, no. Smart contracts, I don't see any businesses using them yet. As far as the original use case of cryptocurrency, which was low transaction cost, fast, 24/7 cross-border transactions, that being the use case. Well, in the time since Bitcoin has been invented, you've had Venmo, you've had Zelle, you've got FedCoin now, and plus with all the regulations and KYC, what's the real point anymore? And so what's the use case of cryptocurrency? Like, you got to ask yourself that. Like, even if you have like this, this coin that you really believe in because it's a project. Like, what's it really going to do for business that makes it faster? Maybe it does have a use case. Maybe it does, but you really got to cut through that hype. But broadly, you got to look at cryptocurrency in the sense like what use case is going to generate wealth. And through this entire move down, I think what we've seen is that a lot of the rise up, a lot of this, which a lot of people justified as it's the future, it's game changing, it's transformative, it was 0% interest rates finding their way into cryptocurrency, basically dollars, which were cheap, being exchanged for this, this good of scarcity. But it doesn't really generate wealth on its own. It only goes up based upon inflows of money, and that's not really a good case. In fact, there's a word for that. There's several words for that, but they don't really. Ponzi doesn't really fit it, so I'm not going to call it a Ponzi scheme. But it definitely requires money coming in order for it to be worth more. And so you either have cheap interest rate money or hype, which is based on belief, pumping the value of Bitcoin and or the currency that you want to go up, or it needs to have a use case. And so far, there's a lot of good white papers out there, but I don't see any businesses using it. And so I'm never really in a rush to try to buy cryptocurrency cheap. And one of the reasons that I always cite for that is, of course, Amazon, which, of course, is a great trade this year. So Amazon, if we look back at its history, there's a couple of things we can take away from that. So 1997, dot-com boom, people that invested back in the beginning, up to the high, they were up thousands of percent. Sound familiar? But from the high, if you bought it, down to the low, you had a 95% depreciation. Now, if you had bought it, if you bought this company that sold books on the internet, either in December of 99 or in February of 02, or at any point in the next few years of the 2000s, even up until 2020 COVID, you would have been doing pretty well. So you didn't need to be early if this was going to be transformative. So I don't really feel the need to be rushed, but buying it at the hype was not good. And it's fun, I look at charts like this, and I think we're going to see something like this in crypto, because we've seen this multiple times in Bitcoin as well. You have in fact, that looks almost like Bitcoin on the weekly, where you have basically a run up, high, slightly higher high, fall off, and then a slow rise. Not going to be exactly the same, but it's eerily similar. But then what happens is a lot of people buy into that hype, and then what happens is it comes to, look at that, a 50% retracement level, ping, and then it sells off and gives people yet another opportunity. So what you really want to wait for in crypto, if you're not already in this move from either January when it broke out of the cloud. I know we don't have a time machine, but for future reference, January when it broke out, or March when everyone was scared that the banks were going to fail, blood in the streets kind of deal. If you're not in from these levels, you got to wait, because eventually what this is going to do is it is going to come up a little bit, get a little more people in, and then you're going to either go into a malaise or you're going to fall off. It could even come up all the way to here, but it's not going to do this. I'll go on the record saying that. You're going to have a little more FOMO, and then it's going to slowly fall off. And then what you want to wait for, is two things we have. Remember here, a lot of the news articles talk about, Bitcoin is up on the banking FUD issues. Well, after it, but when this is the key right here. This is the buying opportunity. Ignore all that. See, I don't want people to look at those. I don't want people to look at something going up because that makes people very wonky in the head. When there was economic turmoil, when there was fear in the broad market unrelated to Bitcoin, Bitcoin went down to a buying opportunity. That was just like COVID. Like everything else, when we had the most recent big economic event, COVID, from its high in February of 2020 down to the low in March, went down 61%. So a lot of people don't want to miss this cryptocurrency move. I get it. It's a feeling, but get over that. Get over it. You need to, if you're, a lot of, in the news are always talking about, this recession that's coming, which is ironic because no one sees a recession coming is what usually makes it bad. But eventually we're going to get some kind of a panic. That's what humans do. We may not have another one for this year. It may be well into next year, but there'll be something. There'll be something, some reason, I don't know, like Putin decides to invade India or something like that. Who knows? And that will create an opportunity for all risk assets to go down. So you should always have some worthless US dollars in reserve for a buying opportunity. And that's really your best bet, is to wait for everyone else to panic and then have the wherewithal to realize, Norak told me that in economic events, Bitcoin is going to go down just as much, if not more, than other risk assets. And it tends to be a buying opportunity because Bitcoin is, after all, not related to these events. Same thing happened in 2019, where you had the big, like I said, this is what I'm most concerned for people about. You have your 2017 run, falls off, everyone tries to FOMO in thinking that, this is it. But then only to have it malaise, boom, down on an economic event, and that's when you wish you'd had the cash. So I'm not really that interested in crypto right now. It needs more time for the emotion to settle for the last 2 years. And you're going to get some kind of a FUD opportunity, maybe not this year, maybe not even next year, maybe even 2025. But that will set you up with a really good risk reward if you have the wherewithal to take it. So that's what I really think about cryptocurrency right now, whether it's Bitcoin, Ethereum, or any other altcoin. I know a friend of mine has been playing this XRD. It's a project. It's something. It's a coin that has a development environment. It's kind of like a programming language to itself. I got to hand it to him, my good friend. He was buying it back in here, and he hodled it all the way till it came down here, and now it's sort of a buy the rumor, sell the news sort of thing, where they're going to have a big product launch. So there's still secular examples out there, but to play these, you can't be reading Twitter when people are jabbering about it. Like, he has been researching and learning about and following this project for basically the last year. So he's been doing his homework. He's been doing his DD, not following what people are yelling. People are yelling about it now, but he had the wherewithal to say, like, hey, okay, this has a use case. This actually has a purpose. It is this development environment that people can use for not just having a coin. I'm really glossing over it because he understands more than I do, and I haven't really looked at it. But he took his time to do the DD on the project, and he was able to basically hold on to it because he believed in it until now. He's getting some benefits of that. So there are going to be little secular cases where you have a valid use case or something that's compelling, at least, that's going to be good. But to get the real gains that everyone wants out of cryptocurrency, you got to get out of this crypto winter. And that's going to take some time. And it's also probably going to give you a better opportunity in the near future when people get a little crazy. So that's my broad thought, long rant about the state of cryptocurrency. All right, anything else to look at? Oh yeah, I need to look at, I am going to come back around to Tesla. Tesla is very interesting. It's been doing some interesting things. And that's something I definitely made a post about to recap here. I updated it today, but we'll talk about Tesla here in just a second as soon as I look at Casey's Microsoft trade. So get your questions in now. We're past 5 o'clock. I need to go get my barbecue ready for a party tonight. Let's see. I cooked a brisket. I found briskets on sale a few months ago, and briskets actually freeze very well. And so I've got one frozen brisket left for hopefully my birthday / housewarming party. My renovation's almost done. Almost is. Anyway. All right, so let's back up a little bit. Microsoft 2020 COVID low to the all-time high. Yeah, I wouldn't have. Kind of 50%, but probably would have stopped you out. But there you go. All right, so where are we at right now? Then I'm going to look at Microsoft's been doing very well. Let's see. Look at that. Look at that. It did the same thing it basically looks like the NASDAQ, except a little more bullish, where you came up to a high right here, ping, little dip below, found this level here, kind of wonky price action. So I would like to see if maybe you can pull back, but this thing's probably going to be pretty strong. This looks like it was, that's earnings. So earnings basically of this week was kind of wonky. Monday and Tuesday this week really faked people out thinking that this thing was going down. But man, yeah, this is up. Let's see. Long entry 306, playing the breakout. Nah, your stop needs to be down here. Because it could come back to retest this level again. Because with all that price action being wonky, what you really need is you need to zoom up to the weekly, and you need to make sure that it holds this level, because it's a lot clearer to see on the weekly, because you have the closing bar here, this bar closed above, closed above, closed above, closed above. This one pierced it, but launched off of it. So you could very easily come back and test it and still go. So really, your stop level needs to be around 275 on this. So if you can still get a risk reward, that might be pretty good. Like something like this, but I don't know if it's going to come back for you. I don't know, but hey, it's stock market go bull. It does. All right, let's take ourselves out. Microsoft earnings, pricing and not buying. Yeah, I mean, I talked about ATVI here a second. Price. They're still committed to buying it, they said. I think Microsoft is just doing well. I don't think it's that they don't plan on buying it. They've already set aside. They already set aside the cash for that. They already got the funding for that back when interest rates were low. And I think they also have enough cash to just buy it outright anyway. So I don't think not buying it plays into it. Let's ride out with Tesla, which was what I promised. All right. So, history lesson with Tesla, because it's very, very important for those that are just coming in or haven't seen my live stream before. By the way, I do these live streams every Friday at 4 p.m. Eastern. Join me if you can. Even if you're catching this late, try to. I also have a Discord. Links below. And if we have TradingView streaming issues, I stream on Discord. I also share my ideas in real time on Discord. And also have a YouTube. So, all right. Tesla. So, if we have a little history lesson of Tesla, it's very important to note a couple things. Back in the ancient times, the BC, 2019 BC, before coronavirus, Tesla was going bankrupt. And a lot of people, a lot of smart, rich, wealthy people put billions of dollars against Elon. And they learned the hard way, don't bet against Elon. And so from that 2019 Tesla's going bankrupt low to the 2021 bullish all things, but more importantly, EV was going to take over. We were not going to have gas cars ever again, blah, blah, blah. All-time high. It sets up a level at 2013. This is split adjusted. They had a split, but to us, the level is 213. And so this level, this 50% level, would be very important in 2022. And so as 2022 got started and price went down, it came down and touched that level, giving a nice buying opportunity. Now, when you see something pull back to a 50% level, what you want to assume is it's going to come up and retest the high. Retest doesn't mean hit it. It just means it's going to make a run for it, going to try to get up to that level. That's what you assume, and that's where your targets are going to be. And if you even look at here, there's a little double bottom there as well. Unfortunately, given that the money printer was not going burr, you got a break of that level instead of a retest of the high. And by break, I mean multiple bars, at least two or just two, closing below that level. At this point, the level is broken. And this is where it no longer becomes a buying opportunity. This is how you keep yourself from taking big losses or looking at a big negative bag hold in your account. It broke the level. And now, once it breaks that level, it enters what I call the valley of risk. The valley of risk is basically the valley you're going to go into and you don't know where the bottom is. You don't know where you're going to stop. And so while people may be trying to DCA in, trying to buy a little bit, you don't know that it was going to stop in January of this year. And that's what basically the last part of 22 was defined by. But we had January. And January saw a 100% rise in Tesla. Nice. And once it rose 100%, what did people assume? Did people take a look and see, this level that was very important from the low to the high, which it respected, it has now returned to. It's gone up 100%. This stock has gone up 100%. What should we assume? Well, some people assumed it was going to go up another 100%. I know I have people in my Discord saying that Aunt Kathy is telling us $1,700. Maybe. No. It hit that level, and that's an opportunity for a short. It just is. I had to take it. Because not only is it the 50% level for that big trend, it's also the 50% retracement of the leg down from September down to January. When both those line up, there's some trades that happen that, I'm not going to win every single trade. No one is. But there's some things that fit my rules and fit the setup so well, I have to take them. So I had to short Tesla. I had to bet against Elon, even though I say that I shouldn't do that. Where am I aiming for? Again, a 50% retracement, 160. Now, it took a little while, and I unfortunately got a little aggravated when it missed my target, and I had to cut that here. I had some options, I had some debit spreads on that actually got to full max profit. But around when we started coming back, I cut my short because I didn't want something that had gone that well to go against me. Oh well. I really wish I was perfect. That would be awesome. That's all I ask for is perfection. But finally, now we get down to this level. A little bit of validation of the technicals. Still made money on it. Great. But do we buy it here? That was a question that people came and posted in Discord, asked me on TradingView. I'm waiting for a setup, just like in anything else. And so this would come in the form of a 30-minute setup, maybe get a little, you know, pull back over the Tinkinson here. But what we actually ended up happening on Thursday, down on the 5-minute, and actually this showed up on my my Discord alerts that I have, because I have TradingView alerts pumped into Discord. Really cool feature. Why I love TradingView. There was a double bottom on the open on the 5-minute with a spike. That opening bar is going to come down, break the low, and I love to see this because a lot of people, the whole premise of spikes that I use is this. Somebody had a stop loss. A lot of people do. I'm sure that if you've been trading long enough, you've done something like that too. A lot of people probably have their stop loss, you know, somewhere like right below this low. I mean, how many times have you done that where you have a little stop loss below the low? It's like, I'm just going to give it that much. Maybe I'll give it a little more. Maybe I'll give it just a little more. That should be enough stop loss. And then what does it do? Bloop, takes your position, and then rockets up. That's happened to me so many times that I finally decided to make it into an indicator, because often enough, and it has to do with the psychology of that. Think about the people that, you know, either entered into a short trade, took the breakout short, or the people that are out of their position. What are they thinking? Well, the people that went short as this thing is going up, they're going to have to close out or not take bigger losses. The people that were out and pissed off, they're going to jump in because they're going to FOMO. And what are you going to have? You're going to have a reversal off that level. And that's what we had on Thursday. So not only are we around this 160 level, but we had a double bottom, and that led into a pull up. Now, zoom up to the 15-minute. Today we had, I posted this in the Discord, we had another opening spike. Now, this is not a spike that I would take as a reversal. There's reasons for that I go into on my spike channel. If you have questions, you can ask there. Maybe I'll teach a class on it one of these days. But this spike comes through the alerts. Come look at it. I'm like, okay, I don't want to take this short. I don't. It doesn't fit my rules. But if we combine this with some Ichimoku trend analysis, now we have something interesting. Because if we can come back up to this little cross here, the stop of the spike, then it will also create a breakout on Ichimoku. Basically, this 15-minute Ichimoku has held the trend all through most of April. 15 minutes really the kind of the key way to encapsulate this downward trend. It came out here, but didn't quite get confirmed. But now we're getting a potential trend change, in addition to breaking the spike high, as I would call it. And so that's good. That's really, really good. And so either the double bottom is the level to go with, or we look at this as a breakout. And the beauty of this is we can fit a really good risk-reward ratio if we give ourselves a stop below this low. Because let's face it, if this thing comes all the way back down here to make a triple bottom head and shoulders, well, if it's head and shoulders, it shouldn't make a lower low. It should just make a upside down shoulder. But we shouldn't break this low that we set up here. If we do, Tesla's probably going even lower. It has to hold here now that it's back above this key 160 level. And so that sets up our risk for this potential trend change. So where are we going to? Well, let's try to do the same thing again. Why change things if they work? So where is this start of this big bearish trend? Well, March 31st down to the low. That really kind of captures this trend. It's just a start, but this lets us structure the trade to begin with. From high to the low, that gives us the nice psychological level of 180, which was also where price kind of did a little hesitation back here in April. So we're going to say our first target is 180. And for a breakout trade with a risk reward of 1.8, that's good. Minimum I like to look for is 1.5. So this is a good breakout setup.